Meta just handed NVIDIA its first real warning shot. Its own AI chip goes into production in September. Plus 4 more moves reshaping the silicon and agent wars today. Let's get into it. Meta will begin manufacturing its own data center AI accelerator, codenamed Iris, in September. The sharpest signal yet that the biggest buyers of AI silicon want off NVIDIA's meter. Designed with Broadcom and built by TSMC, Iris cleared testing in just 6 weeks with no major issues, and Meta paired it with Muse Spark 1.1, its strongest agentic coding model yet, sporting a 1 million token context window and parallel subagents. The market loved the 1-2 punch. Shares closed up 4.7%. Thursday, their best week in over 2 months. Why it matters. Meta deploys roughly 7 gigawatts of compute this year, doubling to 14 by 2027, and every watt it runs on its own chip is revenue NVIDIA never sees. The bear case. Custom silicon has a graveyard of failed programs, and 6 weeks of clean testing is not 6 quarters of production yield. The forward signal. Watch September tape-out. If Iris ships on schedule, expect the own the stack debate to reprice every merchant silicon name. Micron just made a $250 billion bet that the AI memory boom is real and durable. The HBM and DRAM maker lifted its planned U.S. investment to over $20 billion through 20, a $30 billion jump from last June's commitment, citing AI memory demand and the Trump administration's domestic manufacturing push. The stock rose forte and dragged the entire chip complex higher. Why it matters. Memory sits beside every AI processor in every data center. So Micron's escalation is a real money vote that hyperscaler capex keeps climbing, not peaking. The plan includes up to $3 billion for the U.S. supply chain and targets producing 40% of its DRAM domestically across New York, Idaho, and Virginia. The bear case, a 10-year, $250 billion pledge, is easy to announce and easy to quietly trim if the AI trade cools. The forward signal. This sets up the SK Hynix NASDAQ debut hitting today as the market's first live price check on pure-play HBM demand. OpenAI just fired its biggest shot yet at Anthropic. The company launched ChatGPT-COWORK, folding its Codex coding agent into ChatGPT as a full agent mode that gathers context across your connected apps, runs multi-step projects autonomously for hours, and returns finished spreadsheets, slides, docs, and live websites instead of chat replies. Powered by the new GPT 5.6, it's a frontal assault on Anthropic's Claude COWORK for the non-coder enterprise agent market. Why it matters. This is no longer a benchmark race. It's a product cadence war, and Anthropic answered the same week by shipping Claude COWORK for mobile. The bear case. Autonomous agents that run for hours are also agents that fail silently for hours, and enterprise trust is earned in reliability, not demos. The forward signal. Watch the Plus and Business rollout over the next few days. Broad availability plus low error rates would validate the super app thesis. Visible failures hand, Anthropic, the reliability narrative. xAI's Grok 4.5 landed independent benchmarks a day after launch, and the headline number undersells the threat. It scored 54 to place 4th on the Artificial Analysis Intelligence Index, behind Fable 5, GPT 5.5, and Opus 4.8. But here's the nuance investors should catch. Grok 4.5 posted the single best agentic tool use score of any charted model at 33%, and matched GPT 5.5 on the Coding Agent Index at far lower cost. Why it matters. That combination, best-in-class tool use plus cheap, is a direct wedge into exactly the high-volume agentic workloads where Anthropic's Claude leads, the same battlefield OpenAI just entered with ChatGPT work. The bear case. Benchmark tool use scores rarely survive contact with messy real-world enterprise workflows. The forward signal. Watch developer adoption over the next month. If Grok's price performance pulls real coding agent volume, the two-horse agent race becomes 3. SK Hynix just priced the largest ADR offering in market history, and the price tells a story. The memory giant set 177.9 million ADRs at $149 each, raising roughly 26 billion below the earlier 22 billion talk on Seoul market softness, though still ahead of Alibaba's 20 record. When issued trading opens today under the ticker SKWAPWAH, with regular trading under SK on Monday. The deal was 7 times oversubscribed. Why it matters. SK Hynix supplies the HBM, sitting beside AI processors at Microsoft, Amazon, Google, and Meta. So this is the market's first real price discovery read on the AI memory trade at scale, landing the same day Micron pledged $250 billion into the same demand. The bear case. Pricing below the range on soft demand is a subtle warning that even hot AI names have a ceiling. The forward signal. Watch Monday's SK High open. A strong debut confirms the HBM bid. A fade questions it. One through line today. Everyone is racing to own more of the AI stack. Meta the chip, Micron, and SK, Hynix the memory, OpenAI and XAI the agent. The winners capture margin, the rest rent it. If this is the map you trade, subscribe to the Daily Alpha.